the global trading boom has continued to lift the trading revenue in the investment bank, 32% in the most important first quarter, and you've become more optimistic about the full year. What strategic implications does this bigger role of the investment bank have for Deutsche Bank?
Thank you for the question. Well, first of all, I'd say it was a very successful quarter across the board for the company. So the profits were the highest in 7 years, at $1 billion after tax. And frankly, all 4 businesses performed well in their environment. Of course, it was an outsized performance for the investment bank, as you've seen for us and our peers, with over 30% year-on-year increase in revenues. Strategically, really no change. We're executing on our strategy. We have been in the process of in a sense, strengthening the franchise quarter after quarter, getting better and better client engagement, and frankly executing on the strategies that Mark Fedorcik and Ram Nayak set out, I think very clearly at our Investor Day in December. We're seeing the implications of that, but it doesn't represent a change in strategy, rather a strong execution of that strategy in favorable market conditions.
Okay, you've said before that this year will be about increasing the top line, and it will be a year of investment as well. There have been hires in certain areas like the Spac business, for instance, and some areas of trading. Will headcount in the investment bank increase this year in the full year?
We've talked about making selected investment. As you mentioned, by the way, we are calling now for revenues in the investment bank to be in line in 2021 with where we were in 2020. And again, that's encouraging. It's mostly the impact of a strong first quarter coming through. But it does, of course, give us the confidence to continue in making the selective investments that we laid out for investors back in December. It's all within, if you like, our wheelhouse, so our strengths and selected client areas of focus where we think we can compete and win, but where there's still some room to build and improve our market share, improve our ability to support clients.
Can you give examples of those areas?
Sure, there have been a number that we've looked at. We have made investment in European government bond trading, and we've seen the benefits of that. We've been making and looking at hires in the US in our rates business, and also credit flow globally, all of which are strengths of the firm and where we think we can continue to build. But remember, it's within the sort of appetite and strategic direction that we set for ourselves several years ago, but have reaffirmed for investors in our last 2 investor days.
Okay. In terms of the investment bank, has the positive momentum that you've seen in the first quarter, has this continued into April?
Look, we saw already in the first quarter the normalization that people had called for. We'd seen some of that in the first quarter, and we say particularly rates, FX, emerging markets have begun to normalize. And we see that continuing now in the month of April that we have behind us. We do continue to see strong pipelines. We see activity sort of continuing into the second quarter. So it's, remember, a very difficult comp for the industry in the second and third quarters, because those were particularly buoyed by the environment that we had last year. Nevertheless, we see a sort of encouraging ongoing activity.
So we won't have a similar pace as we've seen in the first quarter?
We would not expect a similar pace to the first quarter.
Okay, and that's for the trading business, or in particular, or
trading in particular. Banking, I think, continues to see relative strength. I think at this point, the year-on-year wallet is probably ahead of last year, going towards flat. So I think we're still seeing a healthy level of activity in the corporate finance businesses.
Okay, the Spac business, is that slowing down a lot?
We would expect to see a slowdown in new special purpose acquisition company issuance. We've obviously had a boom and benefited from that in our business last year and in the first quarter this year. For us, it's a business we've been in consistently for a very long time. So it's obviously gratifying to be able to benefit from the boom, but we see it as one financing vehicle among many that we've consistently supported.
Has there been any impact from Archegos? UBS said yesterday that they're reviewing their prime brokerage unit and the wealth management clients because of that. Are you doing something similar?
So first of all, we did see an event with a prime finance client late in the first quarter. As we said, we were able to exit the collateral positions without a loss. In fact, we were able to return excess collateral to the client. We're very pleased with the way our risk management functions function through the process, both in advance of the market events and then in the liquidation and managing through that event. Okay. We have, of course, looked at whether there are any sort of read-across lessons to be learned in that client base. And we're pleased to see that there really isn't. It's an isolated case in terms of our clients. And of course, in our case, this business is on its way to be transferred to BNP Paribas. And so I think it was especially important for the business to demonstrate the strength of our risk management capabilities and as we complete that transition later this year.
And has this triggered any kind of review of the, of clients in general in those kind of businesses?
Well, look, first of all, BNP Paribas naturally will look at our business and clients and make their own determinations as we transfer, and that's a process that's ongoing and I think has gone very smoothly. We of course continue to engage with hedge funds around the world in our businesses, and we do so appropriately. In a sense, this has all gone through a live fire test. When I think about the market volatility that took place last year, that was in a sense a test of, are your margining policies adequate? Were you able from an operational standpoint to handle these events? And we came through, I think, extremely strongly. Okay. So lots of lessons over time, but they tend to reinforce our strong risk management.
Okay. You have accrued 300 million euros for dividend payments in the first quarter. Does that mean if we look at the full year and multiply that investors can expect a payout of more than 1 billion for this year?
Well, it's always difficult to simply annualize a first quarter, but our accruals are actually mechanical, subject to some rules that the ECB has laid down. So there's not too much messaging in that, but I think the encouraging thing is with 300 million of an accrual for distributions already done in the first quarter this year, and of course we'll continue to accrue from profits in the remainder of the year, we can begin to show the first installment of the capital return that we promised investors back when we kicked off our transformation in July of 19, expecting to be able to distribute 5 billion euros over the next several years. This first quarter was a great first installment.
Okay. We're coming to an end. I wanted to ask you lastly about return to office. Employees are, slowly, globally starting to come back to offices at banks worldwide. When do you expect the majority of your staff to be back at the office?
Look, it's very hard to say because it's so location specific. And we've been managing it that way. There's been sort of global crisis calls now for over a year, but also a lot of local and regional management of those decisions. We'd set rules for ourselves in terms of both what the government's instructions were and the comfort that we have with our employees, and we're going to execute on those rules over time. We do see that opening coming, and we'd expect in some important locations like London, New York, that to start over the next several months. But we're also, and we've announced this to our employees, we're also moving to provide our employees some additional flexibility in hybrid working models. And so I think there's some really positive lessons learned from the way we were able to operate in the pandemic. And we're in the process of finalizing those plans and articulating them to our employees.
How many days will you allow them to work?
It's a range of 40 to 60%, we think, of flexibility. And it'll really be up to the employee, but in a structured way with the manager. So it's so that we sort of know when people are expected to come to the office. And we're pleased with the way in which we've been able to formulate that process.